So we're coming up on the end of June, which means the market data for May is out. So it's time for another real estate market update for the month of May 2023, and we're going to get started right now. Welcome everybody, this is All Things Tennessee, and I'm Ben Barreto, a local real estate agent with Wallace Real Estate in Knoxville, Tennessee. Today I'm going to discuss the most recent housing market data for both the U.S. economy, and then we're going to talk about the local data for Knoxville. In this video we're going to cover the numbers for the month of May. Let's get started. So this market has been filled with a lot of falses, a lot of untruths, a lot of misleading. And what do I mean by that? So there's a lot of false hope that homes are still selling for 25% over market value like they were 6 months, 7 months, a year ago. On the other side of that, there's a lot of false talk about market crashes and, recessions. And I'm here to tell you that based on everything that we're seeing and the data, all those people on the extreme sides of the arguments are all full of. Today I'm going to break down the numbers and explain why things are overall fine. And you see, if homes appreciated at rates of 15 to 20% a year for several years, 5 to 6 years, and then suddenly they're going into negative appreciation by like 1%, 2%, 3% for a few years, is it really a recession, and is your home really worth less than when you bought it? Of course not. Just do the math. If you gained $100 today and you lost $20 tomorrow, you're still $80 richer on day 3 than you were on day 0. So if your home appreciates to the point of you having $150,000 in equity after a few years, and then a few years after that you may lose a little bit, you're still $100,000 richer. So listen, I'm going to do a deep dive into that in the coming weeks and post a video on why none of that makes sense. But for now, let's just focus on the market statistics and the housing market data for May. And as always, let's start with the U.S. economy. So first we're going to talk about active listings, and there were 21.5% more homes for sale in May compared to May of 2022. This means that there were about 103,000 more homes available to buy on a typical day this past month of May compared to a year ago. However, the inventory growth rate for homes actively for sale did continue to slow down for the third month in a row as fewer potential sellers opted to list their home and as the market lapped the period of higher inventory growth that started in May of last year. Despite recent year-over-year active inventory growth, there were still fewer homes available to buy on a typical day in May than there were a few years ago. And this isn't anything new. I've been telling you we've been dealing with an inventory struggle for some time now. But listen, before you doom and gloom folks try to leverage these down numbers, you got to remember that we're coming out of a few years of the highest growth rate and the most extreme sellers market we've seen in the history of tracking this stuff. So overall, things are just really going back to normal. It just feels like a big loss or a big deal because we all got spoiled with the crazy market that we just came out of. Next up is pending listings, and the number of homes that are the number of homes under contract declined by about 18% compared to the same time last year. This is slightly lower than April's 22% decline and a much improved from December's peak decline of 36.9% year over year. The stabilization and improvement in pending home sales could suggest that the number of home sale transactions has bottomed out and is making a slow but bumpy recovery. And next up, we're going to talk about days on market. And the typical home spent about 43 days on the market this May, which is 2 weeks longer than this same time last year. But homes still spent 9 fewer days on the market this May than they did in the average May of 2017 and 2019. Next up is median list price, and the national median list price grew to $441,000 in May. That's up from $430,000 in April. However, it's still down from a record high of $449,000 in June of last year. And based on current trends, it's possible that it won't hit the previous year's peak for the first time in our data. This median list price represented a yearly growth rate of only 0.9%, which is lower than April's 2.5% growth rate and is the lowest price growth in our record since 2016. Now, the national median sales price did shrink on an annual basis for the third month in a row in April. Again, look at the numbers. The peak was 449 and we're sitting at 441. That's less than a 2% decline after years and months of averaging 10 to 20% in increases. You're still sitting pretty well, and if you buy a home in the middle of this small decline, you know, just looking at the history over time, you're going to be fine. Okay, unless you're planning to buy and sell in a very short period of time, you're going to come out ahead. Before jumping into the Knoxville numbers, make sure to check out last week's video where I touch on a similar subject, and that is whether you should sell now in 2023 or wait until 2024. You can watch that video by clicking right here, or as always, find the link in the description. Also, make sure to like and subscribe while you're here. And if you are thinking of moving to East Tennessee and you need a realtor, my contact information is right here. It's also in the description. It's also on the About page. It's easy to find. Give me a shout. Alright, so with that out of the way, let's jump into the Knoxville real estate market data. And starting with new listings. And the number of new listings entering the market was up from April, but down pretty far from this time last year. Much of this has to do with the lock-in effect that Knoxville Real Estate Board has described like this, and that is homeowners, i.e. sellers, are reluctant to leave their good interest rate mortgages and move into a higher interest rate. If we get some stability in the interest rate department, we may see more movement because higher prices are still enticing many sellers to take advantage of the sustained and overwhelming buyer population and demand. Next up, we're going to talk about supply, and we're back down to 3 months of inventory, which is, again, pretty low, meaning we are in a seller's market. So even though there aren't as many homes selling, the balance between the number of sellers and the number of buyers seems to have moved down at the same rate, which is a rather, it's somewhat unusual occurrence. The median sales price has continued to remain strong in Knoxville, and in fact, we're almost exactly where we were this time last year when we hit the height of prices. Median in the Knoxville MLS is about $335,000 right now. There isn't an expectation that this is going to decrease much, if at all. Next up, we're going to talk about average days on market, and as is typical, the average time a house spends on the market falls from February as we enter the spring and summer months. We're at 31 days on the market on average, which is still a pretty quick pace compared to more balanced years like 2019 when we were on the market for over 40 days. But it's still not quite as quick as we got used to in the last couple of years where homes were selling in like the first 24 hours on the market. Listen, remember to check back as I break down the lies that we've been hearing about the real estate market and crashes and all that stuff. Listen, the fact is it's always a good time to buy and sell if the numbers make sense and your situation matches the need and you work with a great realtor like me. Well, that's it for today's video. I really appreciate you guys stopping by. I hope you found it insightful. And as always, have a great rest of the day and a great rest of the week. And I'll see you next time. Bye.